I think we'll just begin, and people can trickle in after the introduction. But thank you for joining today. My name is Mike Bergmeyer. I'm joined with Nick McCoy, my co-founder at Whipstitch Capital, and Enrico Reyna from SPINS as well. This is a report that we've been delivering for probably, Nick and I have been doing it about 12 or 13 years right now. At a previous investment bank, we used to do this as well, but top trends in the industry, we do twice a year, release the report ahead of either Expo East or Expo West. And so we are actually headed to the show. Nick is actually in the hospital, but in the hotel right now in Philadelphia for Expo. This is live. We will remember that it is live. Last time we did this, Nick's internet went out. I freaked out today as Nick was flying down to make sure he had a car to the hotel, and then he has enhanced internet. And of course, my internet went out 10 minutes ago as we were going through a practice. So we'll see what happens today. But thank you very much for joining. Brendan from our team is running a slide. So Brendan, next slide, please. So the agenda, what we're going to do very, very quickly, just talk about who we are. And then Nick is going to give a little bit of a recap of the capital markets, where they are, where they've been over the last 6 months or so. Then Nick and I are going to reveal our new top 11 trends in the industry. And then Enrico will provide an update of the industry, a lot of great data from SPINS. And then we'll have a Q&A, and Enrico will be joined by Meghana from SPINS as well. And we'll all be here to answer questions. So the next slide, importantly, a full version of this presentation will be available immediately following this live webinar. So 3:30, 4 o'clock or so today on our website. If you go to the section, so whipstitchcapital.com, if you go to the section called Our Take, you will see the Healthy Living Industry Update for September 2021. So you can just download the report right there. And it'll be what you see today plus more. This is kind of an abbreviated version of the report that we're delivering live. As well, for the Q&A that we'll do later on, what people can do is utilize the chat function in your Zoom and just enter questions there. And I will see the questions, and then at the end, I'll moderate the section of the presentation where we do the Q&A. Okay, next slide. So Whipstitch, these are the presenters that we have today. Next slide. Whipstitch Capital, we are the largest independent investment bank in the US that is solely focused on the emerging consumer brands and the better for you sector. Next slide. I'm not going to do a commercial here. A lot of people know who we are, but you know, we intentionally created a very different investment bank. Nick and I did when we created Whipstitch 6 years ago. And so we hope that you'll get to know us better over time. Next slide. Some of the deals that we've done. Next slide. And then Enrico, a little bit about SPINS.
Yeah, so the same thing here. You know, SPINS has been around for over 20 plus years. We've been empowering the industry through our comprehensive data network, and we do that through a variety of different ways. One is our proprietary data partners that we have, come and seen through our natural channel to e-commerce views to independent retailers, all the way to our conventional set of data through MULO Food and Convenience through our relationship with IRI. We have a robust set of product intelligence to help you dive deeper information, which you're going to see a lot of that in the back end of the presentation. And lastly here is, you know, we get all this information, but how do we deliver it through a lot of different platforms that we offer in the marketplace. Next. My particular group, Megan and I, we lead what we call SPINS here, our financial and professional service group. And we primarily focus on a couple of different opportunities. We look at sourcing opportunities, due diligence, and helping portfolios grow. And we work with a lot of different clients through private equity, investment banks, to CPG M&A groups, professional service consulting firms, as well as incubator and accelerator programs. So looking forward to revisiting everyone in the back half here.
Great, thanks, Enrico. So with that, I'm going to hand it over to my colleague, Nick McCoy, who'll provide an update on the capital markets.
Thank you, Mike. And first off, it feels great to be here in Philadelphia, and I'm so excited to see so many of you that we haven't seen in I don't know how long. I guess well over a year and a half now, live in person. So it's exciting to be here. Next slide, please. All right, so starting off with funding and M&A trends, obviously upward ticking numbers as everybody would expect here. As with when you're kind of looking through your syndicated data, your SPINS data, and you're looking at 2020 compared to 21, it's really hard to comp off of last year because there were so many weird anomalies that happened as we went into quarantine and kind of came out, and M&A deals kind of stopped and then came back. So I think in a lot of these cases, it's almost best to compare against 2019. And if you do that, you can see that doubling the first half of 21, we're way north of 2019 in financings, and that trend actually did continue through 2020. And when you look at M&A is actually kind of right on track. And when you kind of look at the last few years, it's been fairly steady in the low to mid 300 range. So kind of a steady there with more and more financings. Next slide, please. The size of M&A deals has gone up over time. This is a range between 10 million and 1.5 billion. So we are cutting off the growth in some of the larger deals here, which is probably depressing the numbers and flattening them. But safe to say that big strategics are buying companies when they get larger. And I do think there's a 2020 anomaly in Q1 where there was a prevalence of a few larger deals that swayed that number up. Because if you take that out, all of the numbers from 2017 through 2021 look pretty much the same. The one other thing I'd throw in there is back in 2016 or 17, you can kind of see how those numbers are going up steeply. And that was really when this trend of big strategics buying companies when they got larger, really kind of, I wouldn't say started, but really accelerated. And since then, we've had private equity come in much greater numbers, and we've had even more recently SPACs come in. And after a SPAC de-SPACs or becomes kind of a public company trading with its one brand, they tend to be voracious buyers of companies. And that will increase the number of deals that are smaller than the average here, which is great for our industry. Next slide, please. So M&A volumes have kind of returned. This is broad, by the way. This data here is not just consumer, this is everything. And if you look at the last few months here, and you look at the months in the beginning before COVID, they're not that dissimilar. We're kind of back in the big world, in the big wide world here to kind of where we were before COVID. Next slide. I talked briefly about SPACs a minute ago. You can see the numbers on the right here of the amount of of SPAC IPOs, the amount of money that's gone in. What's really interesting, to the point before about SPACs being buyers, you can see Whole Earth Brands and Utz on the left. Each one of them has done multiple add-ons since they de-SPACed, or since they went public essentially through a SPAC merger. And with all of the SPAC money out there in SPACs that are going to de-SPAC eventually, it's going to create an arsenal of buyers for things that are 100 or 200 million in revenue as kind of a criteria. It's a much broader criteria here of brands that don't have to necessarily cut price and cut out EBITDA to try to make that size. You can be profitable and be very, very attractive and get great deals. Next slide, please. Health and wellness as a portion of all of the products in the supermarket continues to outperform. And we've been tracking this really closely since the COVID quarantine began. For everybody's benefit, TPL is on the right here. That is all of the products and SPINS. HWI is the Health and Wellness Index, and that is about 27% in dollars or so of the total. And then NPI on the right is about 9%. NPI is kind of the healthiest of the healthy. HWI is healthier than the average of TPL, and that's how they kind of segment them. And HWI, since the quarantine, has continued to outperform by about 4 or 5%, on an annual basis consistently, which is great for our industry. Next slide, please. In the next two slides here, I'm just gonna kind of leave behind. All of this is available on the website. This is just a smattering of M&A deals that have happened, and the next slide is some private placements. A lot of brands there that you recognize, and I'm going to pass the mic.
Great, thank you, Nick. So reminder again, this is live. While Nick was presenting, my internet went unstable and everybody froze, something we have all come to detest out of our lives the past year and a half or so. And I also, during the practice session, I scheduled some work on my house about 9 months ago, and they decided to show up today. So there's a pounding that happens on. So hopefully we'll get through this today, but this is live. So with that, we will go to the virtual drum roll and unveil our new top 11 healthy living consumer trends. Trend number 1. The growth in better for you consumer is now what we call beyond long term, and it did accelerate during COVID. So we went way back for trend 1, and we know this is a jam-packed data slide. We couldn't just figure out what to cut out. In fact, the more we tried to cut, the more we added. But the growth in the natural organic products industry, as you'll see through this data, is sustained and it is long term. And if you go all the way back to 2001, I mean, this is amazing. The industry has experienced nearly a 9% CAGR and is approaching the $300 billion mark in the US. And this is true across food and beverage, functional food, supplements, and natural living. Natural living includes personal care and household, like cleaning and pet. And if you look at the sales data, that's one thing, but one thing we always do internally too is we go to Google Trends. We want to find out, what are people thinking? You know, what are they looking in the trend data really monitors these trends. Have they peaked? When did they spike? Have they plateaued? And we looked at several key healthy oriented terms such as healthy food, low sugar, low sodium, protein. And you see that in the bottom left hand of the slide. It's all sustained long-term growth, and we all think this is going to continue. And then additionally too, in the middle of the slide, we've broken out the CAGRs in the various segments for different time periods. And while there is likely some one-time COVID increases here or bumps in the data from the last 2 years, when you look at the 2-year CAGR of the various national organic product categories, you see strong acceleration. And when you look at the HWI segment, as Nick just discussed, as a percent of total food sales from Q1 18 to Q3 2021, you see a complete 2-point gain, and that amounts to $1.1 billion of market share gained from the industry. So that's huge. And then so we just thought, and kind of looking back, we wanted to think long-term too. And you know, natural organic is no longer hippie food. It tastes great. It's available almost everywhere. And for future generations, it was interesting. We've got 2 team members who just had babies in the last year. They're not going to be switching from conventional to better for you, but today's consumers are born better for you consumers. And I think that's a huge, huge change to think about. Trend 2. Breakout brands are finding new and innovative applications for tea as an ingredient. Traditional ready-to-drink tea has historically been a difficult category for better for you brands to grow and get acquired. It's an interesting dilemma, an interesting question we often get. Why is that so? This is a large category. According to SPINS, ready-to-drink tea plus some select mixes and iced tea bags is over a $4 billion category in MULO with 8% growth in the last year. But when you take a look deeper, over $3.5 billion of those sales come from just the top 5 brands: Pure Leaf, Arizona, Lipton, Gold Peak, and Snapple. Coke has Honest Tea in the better for you side and Gold Peak. Pepsi has a JV and tea with Unilever, Pure Leaf and Lipton, and KDP has Snapple, so perhaps there's some room to add there. But the big players have laid their stakes. But tea is a great ingredient. It's proven health benefits, anti-inflammatory, and many teas have caffeine, providing pure natural energy. So what we're seeing, and we have termed for some of these breakout brands, like the ones featured on the slide here, is that they are using tea in a new, innovative way to, quote, bend the tea category. For example, when you look at food, you have brands like Verb and Bars that are using green tea for caffeine. In alcohol, brands like Flying Embers are using tea as a base to create a whole new category in hard kombucha. And in ready-to-drink tea, you have a new brewed like beer category, like Hoplark. No alcohol, no calories, but a craft taste. And of course, energy drinks, Guayaki, Guru, Clean Cause. there are just so many great new applications of tea that we're seeing out there, and that's trend 2. Number 3, consumers are more sober curious than ever before. It's an interesting category and interesting data, in terms of alcohol and non-alc, but the decline in beer sales is pretty stark. In volume, overall beer was down 3% in 2020 and craft was down over 9%. That's volume. What about dollars? In 2020, the retail dollar sales of craft beer decreased 22% and now account for just under 24% of the $94 billion US beer market. It's a big category, but it used to be $116 billion. So that's a decline of over $22 billion. Younger people drinking less is a long-term trend. Why? There are some various thoughts that we have on what we've seen. Part of this is a rise in cannabis as an alternative. There are public health messages discouraging drinking. There's a change in societal norms. And with cell phones, and I have teenagers, they can't hide like in the past. I'm glad there weren't cell phones when I was a teenager. Whatever the reasons, consumers are looking for non-alc alternatives. And then when you look at the data, 50% of people over 21 are looking for ways to decrease alcohol consumption. And alcohol-free alternatives honestly can have some advantages. They can avoid the expensive and complicated 3-tiered system of alcohol distribution. They can utilize D2C and e-commerce. All that said, drinking alcohol, as we know, is not going away, not at all. In fact, there's good evidence in the data suggesting that alcohol consumption increased during the pandemic. The psychological stress from COVID-19 was very real. But that said more, the pursuit of alcohol alternatives for more and more is also real. If you look at the non-alc beer segment, for example, there really had been little innovation for roughly the last 25 years, but it's now the industry's fastest growing segment, up over 4%, 400%, in the last year. And if you look at the major labels, you have zero ABV entrants like Heineken Zero, Budweiser Zero. Athletic Brewing in this past July announced a $50 million funding. And Hoplark, again, from their website, they say, what happens when you brew tea like a craft beer? So those alternatives are really growing. Number 4, when celebrities stay authentic to who they are with better for you brands, the impact becomes tangible. We've all seen celebrity-backed companies and celebrities involved with companies. Sometimes they work, sometimes they don't. So we try to think, what was it when they do work? And we kind of came up with this phrase that when they stay close to their lane, you see success. And it's been a very good year for several celebrity-backed businesses. For example, Jessica Alba's Honest Company, founded in 2012. It's a natural baby and beauty company, went public last year in 2020. And the authenticity is there. Earlier, Alba had stepped away from her acting career to focus on health, be a mother. And the inspiration for creating the company came to Alba while washing her first baby's onesies, and she broke out in a rash. And lived with chronic asthma, had allergies as a child. And so she struggled to find natural products and then created the company. Now over 300 million in revenue and nearly $1 billion market cap. Similarly, Gwyneth Paltrow's Goop has continued its strong run. 2018 raised $50 million at a reported $250 million valuation. And Goop has a strong focus on health, wellness, premium products. Basically, the content of Goop matches the persona of Paltrow. And third, Jennifer Garner, often viewed as an actress embodying America's mom, joined industry icon John Foraker in 2017 to help lead the baby food company Once Upon a Farm. And they're clicking. Sales are up 72% year over year in SPINS. And in some brands to watch, we love Supergoop. And there you had in 2014, tennis star Maria Sharapova joined founder Hallie Thagard as a co-owner, and the results have been strong. Trend 5. The sexual wellness category is booming and honestly no longer taboo. The sexual wellness market is a large market and growing. It's $10 billion in the US in 2021, and is expected to continue to grow 5% a year through 2027. And survey data really shows how rapidly growing it is. There is 100% growth in 2019 to 2020 in consumer participation, and nearly 70% of the US adult population is open to purchasing a sexual wellness device in the future. Sales data backs this up too, and this is pretty astounding. Retail sales of sexual wellness devices have experienced an amazing 44% 3-year CAGR. So this wasn't just a COVID phenomenon. So why is this growing so quickly? Younger consumers are really seeing a connection of sexual wellness to self-care, health, well-being. The growth in online e-commerce obviously helps this category as well. But there is really a mainstreaming of sexual wellness that's out there too. It's driven in part by the COVID-driven lockdown, but also changing social norms and lower levels of sex among younger populations. And of course, social media also has its influence with pushing these products as well. Globally, this is a gigantic market. This is a $70 billion market. And there's some brands to watch that we have included here. Plus One, it's the #1 retail sexual wellness brand in the US. And there's other investor-backed brands like Dame, Lola, and Cake, among others. I will do trend 6 and then hand it off to Nick to top off the 11. But number 6, the mental health issues caused in part by COVID have increased the importance of rest and recovery products. So while social isolation may have helped grow the sexual wellness market, the isolation also led to severe and widespread and very real mental health issues in society. This is a depressing statistic. There are a couple of depressing statistics here, but the percentage of Americans who were either dissatisfied or extremely dissatisfied with their current health status grew to 43% of the population, nearly 1 in 2 in June 2021 versus just 31%, about 1 in 3, just 4 years earlier. So this is a remarkable and really a disturbing jump. And it's easy to understand why. I mean, yesterday, John Hopkins reported the grim news that now more than 675,000 people have died from COVID in the US. That's 1 in every 50 Americans. That I'm getting depressed talking right now. People are stressed and demand for therapists is at an all-time high. But people are looking for ways to care for their mental health and looking for products related to mental health, related to sleep, rest, mood, recovery to help them. For example, in 2020, sales of melatonin jumped more than 42% from 2019 levels. And that usage was not related to jet lag recovery. So at the bottom of the slide, we highlight some brands in several different categories that we see as primed for long-term growth. First, wearable devices. Brands like Whoop, they're representing a new generation of devices to help consumers monitor recovery, sleep, training, health, and provide personalized recommendations and coaching feedback. With RTD beverages, you have brands like H2 Rosewater. If you look on the website, there's claims and statements around promoting better sleep, decreasing stress and anxiety. LifeAid, a functional beverage company, they have a hemp blend that includes ingredients described to health, balance, mind, and body. On the app side, you have Calm, the #1 app for sleep, meditation, relaxation. Over 100 million downloads. I think I need to get this. I missed the boat there. And on the supplement side, you have brands like Reset, which is centered on reducing stress, promoting sleep, and Winged, a women's wellness VMS brand with products focused on sleep and relaxation, among others. That is trend 6, and I will hand it over to Nick to top out the top 11. I will also remind people too to enter your questions on the chat function for the Q&A section later on. Okay, Nick, take it away.
Thank you, Mike. Trend 7, ad exhausted audiences increasingly look for authenticity. So it's actually an interesting trend because I think back to my childhood and what made commercials, the mini commercials that stick out in my mind stick out. And it was jingles and slogans and things that were kind of unique to a brand. And there was also some that would provoke an emotional response, like the very famous Coke commercial with Mean Joe Green and Little Boy. Today, more and more, it's getting through the kind of clutter of all the ads that are out there. It's especially with young and up and coming brands, it's authenticity. It's more than just a jingle. It's more than just a slogan. It's actually a connection with the founder or the story of the brand and what the brand stands for, and the trust that that's really true, and that it's going to map to you and map to your situation, how you choose to make that connection. And that is what's kind of breaking through. And it's very interesting to watch when you look at some of the brands on the left here and how they've done it through their social media. Trend 8. D2C channel acceleration provides new opportunities for emerging brands to disrupt static categories. So direct to consumer is actually pretty interesting because it enables an up-and-coming brand to be able to horizontally grow organically through the broader population without having the inertia of being stuck in just one store banner. So if I think back, 10 years ago or so, before D2C and social media were so big, the path to market was typically you went into natural, and then you get in a few markets, and then you get into Whole Foods, then you make your way to mainstream. And at that point, you were kind of large enough that you'd start to think about broader brand promotion. But it didn't make sense before because you could promote it all you want, but where would people get it? And there were actually examples of that 20 years ago during the dot-com boom, when there were companies that were a year old that would spend their entire Series B in a Super Bowl ad. But that was a very unique time. That's the only time I can remember that happening before now, where there's a much more economically viable way to be able to find within this very large population the customers in your unique white space that you're addressing, plug them in via your social media, and grow your brand organically direct to consumer. And that's very, very unique because you can learn so much about who your customer is, what they want, and kind of form and shape your brand and your packaging and formulation and size and in the way that you're going to expand, all with that data early on. And that's really, really powerful for a brand. Next slide, please. Flexitarian consumers driving the growth in plant-based categories. So if I think about over time that all of the people who are vegan that I've talked to, there's really kind of three drivers. There's animal rights, there's sustainability or environmental considerations, and there's health. And it's interesting because the number of vegans hasn't moved that much, but the number of people who have gone beyond meat to explore the better plant-based alternatives that exist now compared to what existed 10 or even 15 years ago, or even a few years ago, as formulations and food science and ingredient availability and all of these things have come together to broaden the product portfolios to give much better quality alternatives to the meat-based comparable in categories. And so we're seeing a lot of growth across a broad group of categories here, or subcategories, as people have done this and explored going beyond meat. And when you think about it, as our population expands and our globe approaches peak population, we will be eating a lot more plant-based protein because the earth is capable of making a lot more plant-based protein, and it's much more sustainable to do so. So in many ways, this is kind of the first or second inning of a trend that's going to be here for a long time. Trend 10. The constant consumer utilization of grocery delivery is here to stay. And this is about behavior change. There was a time before COVID where grocery delivery was very uncommon. You didn't do it that much. There was Peapod by Stop and Shop and things like that, and they were out there for a few, but they were somewhat anomalies. And all of a sudden, with kind of in the last part of the last decade, getting more and more D2C, so you're kind of buying groceries on Amazon, to now with COVID being forced because you're in quarantine, and I know we went through this as a family, having to go and actually being forced to buy your grocery through a delivery service. And I think a lot of people have gotten used to this concept and kind of, releasing the comfort factor of walking in the store and handpicking their groceries and doing it. And they found that it's convenient and it buys them more time in their lives for other things. And now that we're coming out of this whole COVID quarantine and we're getting very busy with other things, I think everybody else is probably feeling that busyness factor in their life going up. It's very easy to change your behavior here. And that's what we're seeing in the numbers in the bottom. Trend 11. Consumers, companies, and investors increasingly becoming more active on ESG Jedi social initiatives. So we're definitely seeing more money in the investor side with ESG funds. The net inflows and ESG funds have gone up considerably over the last 2 years. And you can see how the assets under management have continued to grow. That is just dedicated ESG funds. That does not include all of the other funds, which more and more you'll see have an ESG statement on their website and have limited partners that appreciate the fact that the portfolio itself has some impact leaning too. One of the reasons for this is economic. It's that if you look at the ESG tilted S&P 500, as they call it, it's actually overperforming the whole S&P 500 by about 1% a year for the last 7 years. So it's not just that people want to do good and people want, more equality in life and they want more sustainability. It's that, we're actually in the point in the development of society where it makes economic sense to do it. And people are voting with their dollars because they care and because they're coming out of COVID and there is more community aspect to society, but also because it makes economic sense. And the spread now between the sustainable alternative and the conventional has shrunk a lot compared to what it looked like back in 2006 to 10 when you were walking around the expo floor, and sometimes the organic product might be twice what the conventional is. It's very different now. And it's interesting when you think about the flexitarian, the reasons why people are vegan. Well, 2 out of 3 of those are really ESG reasons. So it just makes sense. And now I'll pass back to Mike to finish off.
Okay, I'm going to finish it by saying, there you go. There's your top 11 trends for September 2021 ahead of Expo East. But I am then now going to hand it over to Enrico, who will lead the SPINS part of the presentation.
Thanks, Mike. So as you know, the natural product industry has been incredibly growing over the past, growing and evolving over the past 20 years. In that span, SPINS data has emerged as the common language connecting natural brands, retailers, their partners, and just directly fostering the growth for better for you brands in North America. So with that said, let's turn into some information here on the overall industry. Understanding the macro context isn't easy because we're still emerging from a period of time where no business was operating as usual. Versus last year, it's not surprising sales of the most products are down across channels coming out of COVID, the COVID boom. However, interestingly, natural and specialty product sales exceeded last year's historic growth from the COVID boom in conventional channels compared to 2019. The natural and specialty are up across all channels. So definitely seeing some growth tying back to the previous slides on the top 10 trends. Next. When we look at attributes that are really kind of anchoring the scalability and positioning in the marketplace, there are a few that kind of like pop out to us. These are some of the common ones as we look at the sales mix by channels here, typical of what we love to do at SPINS. You can see that like a paleo position still has a lot of sales going from in the natural channel and has some scalability so far in the conventional. So we look at the top board here as we see prebiotics kind of growing in the conventional channel. Probiotics, certified non-GMO. They're becoming very mainstream, and scalability is coming to a broader audience. As you think about that broader audience, innovation continues to blossom as shoppers expect more from their dollars. Whether it's new plant-based, clean beauty, functional supplement options, or seeking enhanced nutrition density, shopping patterns continue to evolve, even with a keen eye on health and diverse products. Innovation is fueled by game-changing products that target a desirable source of value, an undressed meant to customer needs, and stay ahead of the curve on attributes. So when you look across the whole entire retail store format, you see better for you products continuing to grow and develop and get stronger. Next. Well, trending signals as a new norm in the industry, there's 2 areas that we're going to talk about and dive a little bit further. One is on the go, and the second is purpose-driven consumption. First on the go, coming out of COVID lockdown, snacking is blossoming and with alternatives, innovation, and better food formats. Secondly, on the purpose-driven consumption, looking at the past year, The momentum of mindful consumption is seeing research's tipping point as it becomes a more norm than an expectation. Next. All right. Oh, nope, go back, please. On-the-go consumption. Time is valuable for consumers, so there's always a search for ways to make their lives easier and more convenient. As people return to work, school, socializing more, and on-the-go options are increasingly important. As the beginning of the pandemic likely threw a wrench for health and fitness goals for many of us, as consumers look to return to the normal, many are searching for sustainable eating plans that allow them to enjoy their food without feeling the need to be restricted. While we talk through and go on-the-go consumption from two lenses to understand changes in consumer preference, a deep dive on snacking and discovering innovation happening in the ready-to-drink alcohol space. As people were spending significantly more time at home and consistent access to their kitchen and bar cart, consumers have had the chance to experiment more and find new staples in the kitchen that excite them while still allowing some maintain better for you lifestyle. Snack foods haven't always, had a best reputation for great nutrition or enabling a consumer to meet their lifestyle goals. But innovating snack products and consumer preferences have changed all that. As folks are beginning to return to work and school, they're searching for options that will help them maintain a healthy style, which in words, normacy again. We're seeing that diet trends such as keto and vegan diets are not fads, as shoppers continue to shop for products that meet certain dietary types, indicated by double-digit growth we're seeing in common snacking categories. Diet trends are limited to just typical entrees and meals. Snacking is an important part of the puzzle when you think about how to maintain a healthy lifestyle on a day-to-day basis. We're seeing that consumers are giving up their favorite types of snacks, whether it's cookies or frozen appetizers, but rather are looking for smarter alternatives. Someone who follows a vegan diet doesn't necessarily sacrifice wanting to eat a yogurt parfait or eat yogurt. Someone who's keto can satisfy their sweet tooth, but while achieving their keto-related macros and bite-sized cookies. Next. The notion that snacks are unhealthy and riddled with sugar are changing as sugar alternative innovations are happening in the marketplace. Sugar alternatives is by no means a new concept, but naturally low, no-calorie sweeteners like monk fruit, with its clean label appeal and disrupting snacking categories with double-digit growth, our shoppers avoid high-calorie, high-sugar offerings. With this negative perception in the marketplace, products such as sugar alcohols are decreasing, and products that are labeled high fructose corn syrup are growing, further ensuring that consumers are paying attention to the ingredients on snacking products. Overall, snacking is no longer just a grab-and-go unhealthy option. New brands are entering the space that are catering to consumer searches for better-for-you options, with clean labels and conscientious consumption on the packaging. Okay. While snacks that meet certain dietary types are low in sugar could be considered nice to have, there are many consumers that with strict dietary limitations, especially around common allergies in food. Historically, many snacks have been off limits for anyone with allergies or insensitivities to many ingredients, such as soy, nuts, wheat. However, more and more snack foods are popping up to avoid these common allergens as brands understand the need to cater to more common dietary restrictions. We're seeing the overall products that are free from the major 8 allergens are up almost 4%. And products free of each of the 8 allergens are more specifically have all experienced positive growth in the last year as well. Folks with wheat allergens can still eat crackers. Folks with milk allergens can still eat tasty chocolate products due to innovations in the marketplace using milk and nut alternatives such as sunflower seeds and coconut oil binders. Nuts and trail mix, dried fruit, and crackers are among the snacking categories experiencing the highest growth of products without common allergy ingredients. Snacks already have a broad appeal, but snacking brands can continue to broaden their research as they accommodate changing consumer preferences. After being home for over a year, consumers have really explored options, various alcohol products to see what their new favorite staples will be. The ready-to-drink alcohol space has seen significant innovation with new product types, like spirit-based ready-to-drink cocktails and wine spritzers, giving consumers new options for those with different alcohol preferences, introducing more competition into the saturated beer segment. On-the-go cocktails are on the rise as they provide consumers punchy flavor combinations that are not easily replicated at home. Though the overall wine spirits product type is down, there are many high-growth brands such as House Wine and Yes Way Rose that offers consumers another refreshing alternative. While the seltzer craze certainly is in effect, given double-digit growth, other unique product types such as hard kombucha and other hard ciders have made it easy into the space and provide unique tastes and take some of the consumer's favorite non-alcoholic drinks and put a fun alcohol twist on them. Retailers and brands and the like can research new consumers by creating new products in these trending segments, showing consumers the grab-and-go list isn't limited to just beer anymore, and there are a variety of healthy, unique options out there. Please. Next is the purpose-driven consumption. Consumers now expect more from the products that they buy. They expect the products not only to taste good, but provide additional mental and physical health as well, ensuring the product taste is good as well. We'll look at the purpose-driven consumption through a few different lenses today. One is sustainability and recognizing that certifications are becoming increasingly important to consumers. Two is understanding leading functional ingredients from a beverage perspective as consumers look for alternatives outside of just water. And especially with COVID, understanding the supplement landscape to see what product types are top of mind. And then lastly is we're going to unpack the key mental benefits consumers are hoping to receive from food, beverage, supplements, and more around the cognitive health. While consumers increasingly care about the better for you product in terms of what they personally consume, they're also increasingly turning to products that are good for the broader environment as well. Looking into some leading sustainability certifications and labels available, we can see that the top growing categories in each across our frozen, grocery, and refrigerated departments. While some categories, such as refrigerated eggs in the certified non-GMO section or bread and baked goods in the certified B Corp section, are not necessarily surprising, it's interesting to see that the top growing categories are non-traditional of what you typically think are important to the labeled organic or certified grain concepts. This goes to show us that meeting sustainability criteria is a good way to win over conscientious consumers. When buying fun drinks, other than just regular water, it's evident that consumers are gravitating towards beverages that provide additional benefits and have functional elements to them, whether it's ginger shots to support immunity or beverages with amino acids to support muscle recovery and post-workout. Looking into two functional beverage categories, shelf-stable functional beverages and refrigerated juice functional beverages, we see that 4 of the subcategories are experiencing double-digit growth in the last year and are sizable in the market. But what makes functional beverages truly functional? Our functional ingredient attributes allow us to understand the core purpose of these innovative beverage products. The table on the right side shows top 8 performing functional beverages and functional ingredients. Beverages are not just a way to quench your thirst. It's a way to get added benefits into your body, whether it's caffeine for energy or turmeric for reducing inflammation. Well, other unusual things of typical Gatorade products to performance and functional beverages, they're seeing a significant innovation in the space. Zoya, a caffeine-based energy drink, includes 0 sugar and 100 calories options, as well as including ingredients to help focus on B6 and B12 vitamins, hydration with potassium, and magnesium for electrolytes. Next, please. While consumers ever conscious about what goes into their bodies to help them live a healthier lifestyle, they are also seeking out products that will help solve for certain pain points and for conditions they're looking to address. Through supplements as a broad space, SPINS categorization allows us to see what conditions, treatments are top of mind of the consumers. Here we've got about 6 high versus low subcategories where within a broader condition, specific supplements category. With the effects of the pandemic certainly still in full effect, It's not surprised that cognitive health, to stay sharp and alert, is still top of mind with the conscientious consumer. It's interesting to see that the top growing subcategories are more in line with mental health aspects, whether it's a low growth subcategory pertaining to physical health. Surprisingly enough, we see immunity at the bottom of the list despite being in the pandemic right now. As we near the 2-year mark of COVID, the mental fatigue is likely contributing to the story we're seeing here. While specific conditions, supplements, tell us a story about consumer behavior, we can also see what functional ingredients contribute to addressing the specific conditions. For example, functional ingredients thiamine is known to lower anxiety and sharpen thinking. Looking at conditions specific others, which will include products such as vitamin blend capsules and naturally occurring ingredient capsules such as turmeric. And cordyceps mushrooms is also known to reduce inflammation, improving oxygen flow, and provide a neutral boost to energy. In regards to beauty, consumers are easily adding collagen products to water or coffee that help them improve skin hydration and overall skin health. Next. And while the better for you universe isn't a new concept, shoppers are now beginning to seek products that address specific concerns. We just saw that cognitive supplements were the highest growing subcategory, the condition-specific category, particularly in these unprecedented times. The ongoing effects of lockdowns heighten the feeling of exhaustion, burnout, feeling just foggy brain. To keep themselves feeling sharp and alert, consumers have been turning to nootropics to get a natural boost in their daily lives. Looking at the major cognitive health functional ingredients, 5 to 6 have seen double-digit growth from the beginning of 2021 through June, at the time in which pandemic was certainly in its prime. Looking at the three clear winners in the space, each are a health important part of the cognitive health, ranging from improving attention, alertness, to mood enhancements. Typically, nootropics are found in either a standalone ingredient or blended ingredients or supplements. We're seeing innovation now as nootropics become readily available in typical food beverage formats. Leading brands in the energy space category, such as C4, have added nootropics to these super brains lines. Ready to drink brands like Keto Super Coffee has added nootropics to the mix of enhanced cup of joe. Beyond beverages, nootropics are also being introduced to quick on-the-go formats such as snack bars, showing the versatile of how nootropics can be consumed. So we covered a lot, but a couple of key takeaways for both on-the-go consumption and the purpose-driven consumption are, consumers continue to seek, diet-friendly on-the-go consumption options for snacking categories. Through new concepts, the alternative sugar and allergen segments are seeing products innovations and brands find new ways to, be better for the consumers and target better consumers. And ready-to-drink alcohol beverage innovation, significant changes in consumer preferences, as beer is no longer the standard grab-and-go option. And then we look from the purpose-driven consumption side, compared to last year, consumers are just more sustainable, looking at sustainable trends. In an environment as many categories see double-digit growth. Functional ingredients growth in the beverage space, that aligns with consumer expectations that we've seen. And lastly, mental health related supplements are top of mind. Nootropic ingredients, what we just talked about, is double-digit growth for promoting more cognitive health. If you're looking to gain more information, or if you're going to be at Expo this coming week, we can either reach out to one of us or stop by the SPINS booth at 2331. Thanks.
Great, thank you so much, Enrico. So we are going to do some Q&A, and there's no way we're going to. First of all, I have to thank the team on our team and the SPINS team, because I no longer get into PowerPoint that much. I take a pencil and I make edits, but thank you so much for the team. We come up with the trends ourselves. We brainstorm. We do a lot of data digging, and it's fun work, but it's a lot of work. So just wanted to thank the team as well, and I know it's the same on the SPIN side as well. And I want to thank everyone for attending as well. We are going to stay for Q&A here, but I know after Enrico, when you said like almost 2 years of COVID, I was like, oh God. I think we're all kind of webinared out. We are zoomed out. So, we had, have over 300 people on here live watching this. So I want to thank everyone for participating today, for that as well. I'm going to do my best to kind of moderate this Q&A. We've got a lot of questions that have come in. So there's no way we're going to get to all of them. So I'll apologize in advance. And again, for those of you that joined late, the presentation, actually a larger form of this presentation will be available on the Whipstitch Capital website. So whipstitchcapital.com, probably sometime between 3:30 and 4 p.m. Eastern time today. You just go to the Our Take section of the site and you can download the report there. Enrico and Megan, this one is probably for you. But we got one about comparing the growth for plant versus animal protein. Are you seeing plant protein growth still higher than animal protein?
Yep. Mike, I can go ahead and take that question.
Thanks.
Yeah, so first, I think it could be helpful just to start a little bit more macro and understanding the broader plant-based position products compared to their mainstream counterparts. And what we're actually seeing is that in both the natural and multi-outlet channels, we're seeing strong year-over-year growth for those plant-based position products. So just kind of narrowing down on one specific month, for example, this past July, the plant-based market was up 4.3% compared to a year ago. But when you look at their mainstream counterparts, they were only up 0.8%. So it's certainly not a fad by any means. You can definitely tell that consumer preferences are certainly changing. But going back to the specific question that you had at hand was looking at animal versus plant protein. We're here to stay because consumers are looking for products that still give them that nutritional and protein parity compared to those animal products, especially if you're vegan or follow a specific diet type. So when looking into the data a little bit more, we're actually seeing that the plant protein trend certainly hasn't slowed down. It's actually growing faster than its animal protein counterpart. So just looking at the last year, August compared to a year ago, plant-based protein products are actually up 21% compared to a year ago, whereas their animal protein counterparts are only up 10%. I thought that was a little interesting. And so I dug a little bit deeper into the different types of animal and plant proteins that we have. So, rice and pea protein, part of that broader plant-based protein kind of ingredient, those are actually also seeing double-digit growth. But actually many of those animal protein types, whey, egg, meat, they're either only up a couple of percentage points or actually down. So it definitely shows us that consumer preference is certainly changing, just as a way to mix things up too. There's a lot of innovation happening in the space too. So you don't need, bland cardboard tasting plant grounds. There's a lot of fun things happening in that space for sure.
Wow, you know your data.
SPINS, we try to do that.
Yeah, wow. Oh, that's amazing. Nick, this one might be more for you. You talked about SPACs during the presentation, and there's been two questions about SPACs. The first is, have we seen SPACs impact new venture capital private equity funding or fundraising? Do you want to tackle that? Then I'll do the follow on. You're on mute. See, this is live, people.
Sorry about that. I think the answer is yes, in the sense that you can now between SPACs and private equity underwrite a financing where you can make your 3 or 4 or whatever times your money that your underwriting criteria is with an EBITDA based exit more reliably. I think yes on that, because they are generally EBITDA based buyers. I don't think that it is being looked at from, I don't think the actual de-SPACing process or the merging into a SPAC is being looked at as, an underwritable exit criteria yet, just because generally speaking, when people either, IPO or they go public through a SPAC, they're not getting full liquidity. With an IPO, it's usually 20% or less, actually probably more like 10% or less. And it can take years to actually get fully liquid if you're an investor. With a SPAC, it's always less than 50%. I think early in this SPAC phenomenon, it was in the 40s. And I think that number is probably going down a bit as the PIPE market has softened a little. So I think more from the add-on in
Yeah.
development of EBITDA.
Yeah. I mean, I think what we've seen too is just in general with SPACs, the best SPAC targets are companies with well over 100 million of revenue, growing quickly, 10 million plus of EBITDA, and money to the balance sheet's going to help accelerate growth and fund acquisitions, which is, not really the typical venture capital target, for a growth oriented brand. But Nick, this probably for you too as well, because you touched on it on your slide, and we certainly have some experience with it in selling Swerve last year, or maybe earlier this year. I think it was last year. Time is all just COVID at this point. But what have we learned about SPACs in terms of making follow-on acquisitions? And do you expect SPAC acquisition targets to be similar or dissimilar to the targets of the traditional strategics?
I do think so for a number of reasons. First off, I think the kind of traditional, let's call it large CPGs, have the best playbook in running and growing very large brands. So call it really $300 million and higher brands. And or brands that can be $300 million. And that usually right now is 100 million or more at the time that they buy it, when you look at most of the headline deals. I think that a lot of the SPAC add-ons are things that have at least 5 million EBITDA, and frequently those are companies with, I mean, it's public that Swerve was actually less than 50. They were very profitable. But you can look and you can see that a lot of the add-ons are companies that are less than 100 million in revenue, which are too small for the big strategics, and they're brands that actually don't really make sense to try to compress the margins to try to grow to be bigger than they really should be. They make sense making a 15 or 20 or 30% EBITDA margin and being under 100 million. And those are great add-ons for SPACs, because a lot of times the brands that initially go into the de-SPACing are those that are kind of more mature, have a lot of EBITDA. They've got a very nice stable EBITDA, kind of margin profile. They can get a lot of debt on them. And then adding more stable brands like that creates just a really synergistic portfolio.
Yeah, totally agree. It's probably more of a SPINS related question, but I think we've seen something here too. But and I'm going to combine two questions that seem related. Someone was asking about I think it's related to a trend we had 6 months ago, talking about frozen and how frozen was seeing a lot of growth in COVID. So question was about the broader frozen department. Has it seen continued growth as compared to last year? And I don't know the answer here, but it could be related. Are there any trends that we've seen that are tapering? I think the person here is asking, in some ways, was there a tapering off in frozen? But have you had a chance to look at that data?
Yeah, Mike, I can go ahead and take that one as well. I think it's definitely an interesting question. Digging into the data a little bit, overall, yeah, the frozen department is still up roughly about 4% when you compare it to where we are about a year ago. 8 of the 9 categories that SPINS tracks are all seeing positive growth. The only one that's down actually is frozen juices and beverages, roughly about 13%. And the category seeing the most growth is frozen breakfast foods. I'm definitely part of the sample over there because I could eat, hash browns for breakfast every day if I could. But kind of comparing, how does that relate to what we're seeing with COVID is that growth range actually dropped a little bit. So from 2019 to 2020, it was pretty hefty amount. Frozen was up almost 15%. But when you look from 2020 to 2021, as not that COVID certainly went away by any means, but people are slowly starting to go back to work or school, whatever it is, the department was only up about 4%. And so I think that could be a factor, just a hunch of what I've been seeing in, consumer trends is maybe people are going back to some of those shelf stable or refrigerated items that you can take with you on the go, since you're not necessarily just in your house, have access to your freezer or microwave at all times. So growing, but not quite at the same rate that it was.
Yeah, I mean, it's interesting because, of course, when we sell companies or raise capital, we got kind of deep in the data, the SPINS data, and Enrico and the team there are probably sick of our emails, probably asking for more. But it's been interesting too. I mean, in talking to some strategics lately, they are talking in terms of, not what the year over year numbers are, but looking at the 2-year CAGRs and really even kind of looking at their own internal brands. Because if you think about, a chart, right, or something, you have 2019 here, as you see a nice spike, then it comes down. But the whole question is, where are you going to level out afterwards? And if you look at that 2-year CAGR and adjustment, then you kind of see where something really truly is and what's been happening to the brand. And they said they're even looking at their own brands that way internally as well as externally. Okay, I think, Enrico, I want that on your slide. You had a product called Brain Awake. So I would like that now, because I've got questions jotted down here. I've got questions in Q&A, and I've got questions in the chat function here. So Nick, this might be a question for you and me here, but looking at, and I think there have been some changes here, but looking in terms of the M&A world and strategics, what are we seeing in terms of the trade-off between our companies taking a look at, but really what really matters for strategics, revenue growth versus profitability, and then kind of getting deeper there. Is there a base level of profitability that matters? And then looking at profitability, how much of it is contribution versus EBITDA? But do you want to take a first stab at that?
Sure. So I think the answer is all the above. So I think obviously there's private equity and SPACs, SPACs doing add-ons, to clarify, that tend to be more EBITDA focused. But when I'm thinking about larger strategics, they really want kind of $100 million and more brands that can be 300 million. And I think, they want things that are very close to break even. The days of somebody losing a ton of money every year, or 10 million more at burn and getting bought, that definitely increases the risk level. I think there's a lot of attention paid to gross margin. And it's a little bit complicated because, more and more people are self-manufacturing these days, and strategics are going to, a lot of times bring you into their manufacturing, or possibly your manufacturing capacity utilization. If you're at 30% capacity utilization, your gross margin is going to suffer. But the fact that you have all that capacity available for a strategic that's in your category is really attractive today. So, that's a case where you could actually have a lower margin and still be very attractive. But I think a lot of attention is paid to that because they need to know that there's going to be enough kind of real revenue, which is what I view gross profit as, to fund the marketing and the things there. Contribution margin is definitely important and related, but right now freight costs are so high that there's kind of an artificial depression of that, which is very variable across different categories. So I think it's kind of hard to compare.
Yeah, I mean, I think in a lot of the conversations we've had, compared to maybe 5, 6, 7 years ago, the importance of gross margin, the importance of profitability, it's more there than it was before. But the true measure of profitability is contribution, and the underlying metric that matters is gross margin. And then you kind of dig deeper even to what's your gross to net, and how much are you pushing the product versus how much is the product, quote, selling itself. And I think strategics have gotten pretty smart about that. And, but they're not going to take something with just kind of revenue growth with low margin that's been pushed, because there's just going to be too many questions about that. I think a related question to this, and I'm curious, I mean, it's probably for you to start with, Nick, but I'm curious, from SPINS, talking to a lot of your clients, if they've been talking about this question too. But we've seen a lot of inflationary pressure lately. Obviously, wages. Everyone's kind of looking. It's difficult to get workers in a lot of different situations right now. So you're seeing wages increase, and the input costs, with food and ingredients, has also gone up as well. So what are we seeing in terms of supply chain, material costs? How does this trends and strategics and so forth? I mean, I'll just start, and then Nick, maybe you can jump in. But yeah, we're seeing this everywhere. We have a number of clients that have had to introduce price increases over the last few months. And in some cases, I would say it could have been opportunistic in that, they hadn't taken it in a few years and this was the right time, but, they were seeing obviously some challenges and pressures as well. In some cases, the price increases aren't even going to make up for the increase in cost. So you definitely are seeing that margin compression. There's a follow-on question about, are we seeing the impact in the data and how are consumers reacting? I think it's very early for a lot of those in terms of, the price increase actually taking effect and what the changes are. But, certainly early on, we're not seeing any, negative impacts here. When we talk to the strategics, they have to do the same thing. So it's happening across the board right now.
Yeah, this is actually something that that we dug into for, I can't remember if it was the State of the Industry presentation or for NZN at this point, but we dug into the numbers around actual ARP. We took all of the brands and spins in MULO and we averaged out month by month over the last 3 years, what was the average ARP on shelf. And there's two factors there. There's how much did a company take in price at its wholesale, and there's the, how much did they actually discount. We haven't gotten that far into it yet. That's actually still something we're looking into. But August of 18, the average ARP was 328, and this August it was 375. And those are for the 4-week quads. So that's a pretty large price increase. And what you saw in the chart is you see a big bump up in the kind of March, April, May, June of 2020, as you'd expect, because everybody canceled their trade spend. And then that was kind of flat, and then it kind of started to tick down. But then we got into this inflationary cycle that you were talking about, Jason, and it's definitely gone back up, and it's continuing to go. So my advice is to brands that are seeing margin compression and getting resistance from their wholesale partners and retailers, is that there is a trend right now of taking price up, and it's very hard to do usually. And there's going to be a time where people stop taking price up. So if you need to do it, this is a very good time. We're also seeing people get closer to their supply chain. Part of that is because of the lack of capacity, but also just because of these uncontrollables like staffing quantity, and that sometimes disrupts somebody's ability to produce for you when you need them to produce. So there's definitely more companies that are backward integrating into manufacturing, which is also bringing them closer to ingredient sourcing. And I've also talked to companies that are doing things to increase automation in certain ways and training their workers for it, which also scores very well on the impact scale. I know one company that's trying to get to a $20 per hour minimum wage in their factory by training employees in English as a second language and training them to operate machinery, and again doing more automation, which is a huge step up from where they were a few years ago, and obviously permanent impact on the employees and families there, because they can take those skills with them if they go, and economically they're coming out ahead, even though obviously the average wage is higher.
Yeah, I mean, Enrico, Megan, I'm assuming your clients are talking about this too. I don't know if you're seeing it in the data yet or not. I think there's a mute issue. Yeah. Okay, while we're waiting, I'll make one plug. If you are going to be at Expo East, Nick is giving the State of the Industry presentation Thursday morning. Nick, is it?
Yeah. Yep, Thursday.
So we'll be there. There'll be 9 of us from the team there.
If you're not here, it is free it's a free registration to see it on the New Hope website.
While we wait for Megan, their audio issues, we have had talked to some of our partners and their portfolio brands, and having some questions just around price increases based on commodities that they might have and they're dealing with. So it's definitely a topic of conversation. I haven't dived deep into the price. I mean, we all are aware of inflation right now, and everything is costing more. And so I agree with Nick and Mike that it's like, if you are going to take a price increase, now's the time to do it, because everyone's almost trained that everything is costing more. We do have a team, a little bit of a plug here. We do have a team at SPINS that's experts in pricing and deeper analysis work. And so through our brand growth solutions team. So if folks are interested in understanding the category dynamics, especially around their products, and looking at how they could be better suited for pricing, is an option to kind of connect with us at the show, or reach out to us. We can help you with that.
Sorry about that. Thanks, Enrico, for hopping in. It's double mute, and then it just wasn't cooperating, but
We're live.
we're back in business.
Well, maybe I think just to respect the time, we're just about out. So, but I've got one more question, and Megan, I think it's probably directed more towards you on the data side.
Sure.
And it kind of relates back to the whole question about trends and categories are up and down, but one we've heard a lot about questions is the bar category.
Yeah.
And I know, what's people are asking someone's asking what's happening there, and obviously bars kind of with typically like on the go type of product got hurt pretty hard as a category at the beginning of COVID. But are you seeing anything in the data about what's happening in that category now?
Yeah, I think there's two pieces to that. One is I think the bars that are doing really well have that protein focus in them. When I was just looking at the data specifically, the products that are seeing double-digit growth are actually those that have protein between 15 and 32 grams. So really looking at that upper higher end, especially from that grab and go perspective, making sure that you feel nourished and fulfilled when you're eating a snack. It's not just empty calories and 20 minutes later you're hungry again. So I think protein, and even lending back to that previous question of plant protein versus animal protein, a lot of these protein bars are coming out with pea protein, rice protein to really grab more consumers. But I think also the other perspective of it is, protein aside, is that functional perspective of when you're eating a bar. Enrico talked about it also from the nootropics perspective. So cognitive health, for example, but we looked at some of the other leading functional ingredients for those wellness bars. MCT, probiotics, antioxidants, those are definitely the top 3 fibers in that mix as well. But I think that's the other lens of it besides the typical kind of protein bar.
Interesting. Okay, now I know who I definitely call if I've got questions on data or categories of what's happening. But with that, I am going to wrap it up. We promised to go an hour 15. We are right there. Thank you everyone for attending, and for those that are Expo East, we hope to see you there. If not, stay healthy, stay safe, and we'll all be in contact. Thanks very much again.
Thanks.
Okay, bye everybody.
Bye.